Hello everyone, and welcome to the latest Global Outlook from the Economist Intelligence Unit. My name is John Ferguson, Director of Global Forecasting, and I'm joined by Mike Jakeman, our Global Economist. We want to update you today on the key changes to our main forecasts. Mike, perhaps we can start with China and our top risk to the global economy.
Sure. So for a long time we've thought that the meeting of the Chinese Communist Party at its Congress would be the most consequential political and economic event of 2017. It's happening as we talk now. And we've expected for a long time that Xi Jinping, the president, would use this opportunity to stuff the upper echelons of the party with his allies.
Yes.
And particularly within the Politburo Standing Committee, which is the 7-member committee that sits at the very top of the party. And the purpose for doing this, as well as ensuring his own survival and his ability to drive Chinese policy, is the idea that he's then going to begin to tackle China's debt problem. And our central forecast assumes that we'll see a slowdown in Chinese growth next year of about a percentage point, driven by the fact that we'll have tighter monetary policy to slow down that debt accumulation.
Right.
So that's what we expect. The risk scenario, and the one that we've been working on this month, is the idea that Xi doesn't do this, either because he doesn't get what he wants at the Congress, or because he doesn't grasp the nettle because it feels too politically risky, and allows this debt accumulation to continue. We're becoming more and more confident on our central forecast, which means that the risk of the scenario materialising is now lower. We're now attributing a moderate risk to this, which is in the region of between 20 and 30%.
Right.
Now, if this scenario were to play out, we'd see a much bigger slowdown in the rate of Chinese growth. And this is a sort of disorderly slump that carries on outside of the purview of the government, has the potential to involve some local banks faltering, and would have a really sort of difficult effect on the global economy, and would suck in lots of China's trading partners. So this, although we've reduced the risk of this, which is actually a positive sign for our overall global forecast, because it means we're more confident on the fact that our central view of China slowing a bit, but in an orderly fashion, is probably now more likely. But let's keep our eyes on the progress of the Congress.
So according to us, the world has become a little bit less risky.
Yeah, we're hoping that the Congress is going to materialise in the way that we expect, and having talked about it a bit this month, we're reasonably confident on that.
Absolutely. Great. So I might shift gears from Asia to Europe and talk about some of the key elections, particularly Germany.
Mm-hmm.
So we've seen over the last month the elections in Germany itself, and possibly the headline everyone expected, Angela Merkel was retained as Chancellor. But underneath that, there's many interesting things happening which we need to keep an eye on. So Angela Merkel, her CDU and sister party CSU, the Christian Social Union, did lose some support. So in a way, they are weakened. But as we said, Angela Merkel is still the Chancellor. The real news came, and where some of that support went from the CDU, CSU, was to the Alternative for Germany party, the AfD. So that's quite a significant event in German politics.
Yep, they're in the Bundestag for the first time a far-right party's been in there for decades.
Right. And received roughly around 13% of the vote. So quite a significant moment in German politics. So now what does that mean? So now we have a situation where a coalition needs to be formed. So what we expect is a so-called Jamaica coalition to be formed, which is a coalition between the CDU and CSU, as well as the Free Democratic Party and the Greens, the so-called Jamaica coalition. That does take time. We don't expect that to happen until December, but that's our view on how the coalition will take place. Now, what does this mean going forward over the next few years for priorities and some of the issues that will be discussed in German politics? There will be discussions of succession planning, but also, given the sort of broad scope and wider range of views we now see in the Bundestag, or will see in the Bundestag, we do expect more focus on issues around immigration, integration and German identity. So much more focus on those issues than was there in the previous government.
So does this mean less of a focus on economic policy? This to me doesn't sound like a particularly dynamic start to a new term in Germany.
That's right, and it's a sign of this populist trend, which we've also seen playing a role in the recent Austrian elections. This is where a lot of people have voted for. This is where people are saying these are the issues we want discussed. So perhaps Germany's been, the engine for European growth for many, many years. Maybe people taking that for granted, but these are the issues now, immigration, integration, identity, that need to be addressed, and that's what we expect to happen in the Bundestag going forward.
So we've seen, there was an Economist cover a couple of weeks ago which had a spotlight with Emmanuel Macron addressing an audience from the stage, and then in the background there was the shadowy Angela Merkel cast out of centre stage, suggesting that France has become Europe's new ideas man, and that would seem to chime with that.
Absolutely. The French situation is very interesting for us. We're discussing a lot with our clients around this populist trend. And Mr. Macron has basically, come to power, and he's putting in quite ambitious reforms, which has taken a little bit from the traditional left, a little bit from the traditional right. And whether or not he can be successful, we think he'll be somewhat successful in his labour market reforms. But that's a real sign of whether or not that success can sort of stem the tide of this populist trend across Europe.
And speaking of populist tides, let's move to Spain, a country that's put through really substantial economic reform since the crisis and has gone from being one of the countries on the periphery of the Eurozone people are very worried about to becoming a kind of poster child for reform. But is Spain going to stay as big as it currently is?
Yes, we expect that to be the case. So that's the end of the story. Is we don't expect a separate Catalonia region to separate from Spain. So that's the forecast. But it's a very complex, very fluid, and very fast-moving situation. So we saw, even though these tensions have been simmering for a long time now, Spain was plunged into a constitutional crisis on October the 1st with a referendum on independence in the Catalonia region. And that had a very high response for the yes vote, above 90%. But the actual participation of that was around 43%. So basically those who were in favour of remaining within Spain didn't turn up to vote. Mm-hmm. But it's been very complicated and it's been a game of cat and mouse over the last few weeks to the point where we're sitting right now. And even recently there was quite an ambiguous announcement from the president of Catalonia, Carles Puigdemont, and everyone was a little bit uncertain about whether he had actually formally declared independence from Spain. So it has been very, very ambiguous, very confusing situation. Where we're at right now, as we sit, there will be a special meeting, a special discussion tomorrow from the central government to talk about how to take this forward. And even though it's a very borderline situation, we do expect and think it's likely that sort of Article 155 of the Constitution will be used in some way. Now, there is some uncertainty about that and uncertainty about how it will be used. But we expect that to be used and possibly used in a way that will dissolve the regional government in Catalonia. So this is a very tense, very, very serious situation. And if we are right, if that's the way it goes over the next few weeks, we would expect regional elections possibly later this year or next year. So again, we don't expect a separate region, but we expect simmering tensions and a very serious and difficult time for the coming months.
So regional elections at a time when tensions are running quite high, the assumption might perhaps be that would return a government that was even more hell-bent on independence, which in turn would force the central government to grant them more concessions. Is that roughly the path we're thinking about? Yeah,
there is a fair bit of uncertainty there. So basically one thing I think we can say for sure is that it's unlikely these issues within Spain are unlikely to go away anytime soon. Yeah. So turning away from Europe and possibly onto another serious matter, the oil markets. We've got the OPEC situation. Maybe you can update us on where we are with our recent changes to our oil price forecast.
Well, forecasting the oil price has been a treacherous job over the past couple of years, and it's actually been a bit more of a pleasure this year because prices have been relatively stable, and we now seem to have hit this period where prices can move from between $50 and $60 a barrel. That's come about because OPEC has taken a fair amount of pain on board by restricting supply. And we've seen compliance with this supply cut deal that's been in place since the end of last year has been pretty good. It exceeded our initial expectations, but in the past few months compliance has begun to fall, and more and more economies are starting to cheat on their quotas, or there are plenty that have exemptions as well. However, we think that we're going to see this deal extended further than we previously thought, and in fact this could be in place right up until almost the end of 2018. Yep. This is because the oil market is taking a long, long time to rebalance. We think we'll see a very narrow market deficit this year, but then the trouble with this is we've got such enormous stocks
Yes.
that are stored all around the world at the moment, and non-OPEC producers are taking advantage of the fact that OPEC is restricting supply, predominantly the US, which means that any savings that OPEC makes on that market balance are then immediately used up by the US. So in a sense, I think we're going to see more of the same for another year or so, where OPEC will continue to kind of hold the line and take the strain. Primarily, this will be a Saudi-led initiative,
right.
Increasing amounts of cheating on the quotas from other OPEC members that Saudi will have to put up with. And then if there's any hint of an increase in prices for any sort of sustained period, that will draw US producers back in to continue to pump out more. The effect on prices is that they're actually going to be pretty flat. I mean, we think there'll be a little bit of volatility as there always is, but probably largely within this $50 to $60 range, and maybe this year we'll see a sort of average price of 53 rising to 54 next year.
Yeah.
After that, I mean, the big risk point is what happens when this agreement either falls apart or kind of naturally ends, which we now think is going to be the fourth quarter of next year. So we could be in for a fairly stable market by recent trends for the next year or so, but watch what happens at the end of next year.
Absolutely, and I imagine we do expect the deal to be unwound gradually, but I think everyone knows all that pent-up supply, if it came onto the market very quickly, prices could go back down to $30, $40 very easily.
Yes, and if that happened particularly quickly, we'd get a plunge, and then I think prices would rise again when sort of settled into a new normal, but that normal may well be lower than where we are now. That could be back to between 45 and 50. So there's an enormous amount still to be worked out, but I think a period of stability is probably in order for the next year or so. But yeah, watch the last quarter of next year.
So it's not a huge change to our forecast. Basically, we expected a slight decline in prices next year in 2018, and now we just see a slight increase. But it's more important is the OPEC deal and the sort of pragmatism of OPEC and other countries in holding back that supply.
Yeah, I completely agree. I mean, and we also need to watch out for some of the more volatile players on the edges of this. Countries like Libya can go from producing 400,000 barrels a day in 1 month and then double it the next month and then retreat again. So they kind of add to a bit of noise on the edge of the forecast as well.
Great. Well, Mike, I think we've covered everything. We've gone from China, Europe, and the oil market. So thank you so much for your time. And thank you all for watching. We'll see you in another month with the latest update from the Global Forecasting team.